All right, guys, so we got a great one here for you today. Let's talk about two stocks that have 90% upside from here. But there are some major flaws with everything around this. And more importantly, there are things that you guys need to understand very, very intimately because it can absolutely destroy your portfolio. I'm not just talking about these two stocks, guys. I'm talking about the way all this comes across in the first place. There's a huge lesson that you got to learn right here today so that way you avoid complete disaster in your portfolio. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And don't forget the Tesla dip sale is going on right now, and obviously hopefully Tesla pulls out of this, but in the meantime, get your massive discount before Tesla does go on another epic run and you miss out completely on a great deal. The link is in the pinned comment down there, so check it out, see everything you get, and see if it's right for you. So TipRanks is giving us two stocks that are 90% undervalued, and there is some portfolio killing that will absolutely happen with stocks like these. So you got to know what's going on. There's actually more going on to this than what meets the eye in regards to these two stocks. So we're going to make sure we cover all that today. I'll give you guys not only my take on the stocks themselves, where I think they're going, what's going to happen with them and all that, but also what is this portfolio killer that is kind of involved in articles like this that can happen to you individually, and what sort of traps are being set for you and all sorts of things like that. We'll talk about all that today. Now, the two stocks we're going to discuss today are Viridian Therapeutics. I think I said that right. I have no idea if I said that right, but you guys know English isn't good to me, so I think it's Viridian Therapeutics. And the second one is however the heck you say that, Biosciences. But I have some questions for you right off the bat before we ever get started with these stocks. Do you know the therapeutics business intimately? Do you understand the actual approval process for basically what they do? Do you know all the various business models that can be done within that industry? And do you understand the pros and the cons of each? I mean, can you name them off to me? Can you discuss them here? I mean, you don't have to be like the expert, but can you at least give me a general overview of what those are? Do you know what the normal margins are? What the normal revenue bump is for this? Do you know actually how Wall Street usually trades this whenever there is an approval of some sort? I mean, is it 10%? Is it 100%? Is it 1,000%? Do you know how the stock moves and how the financials move based upon how the business executes in regards to the business itself? Do you understand how they make money in the first place? Do you understand how many folks this could actually get out to? Do you understand how the insurance industry plays into this and the revenue numbers and everything else that comes in there? Do you actually know what the total addressable market is in the first place? I mean, not in the marketing material, but what is the actual market for this? What are they going to actually charge for this? What is reasonable charge for this? All these type questions like that, you got to know the answers to. These are all things that you have to know. And you got to ask the same exact questions with the bioscience companies as well. So it applies to both stocks. All those questions I just listed off, they're going to be different answers for bioscience than they are therapeutics. They have different answers. Now, I'm sure some of them are very similar, but the point is you got to be able to answer those type questions in regards to those stocks. Now, notice I'm not talking about what's the science behind it. I'm not talking about any tech that they may have. I'm not talking about, what the periodic table that's used. I don't know, the science, all those sort of things in regards to how it actually works. I'm not talking about any of those things. I'm talking about the business itself. That's what we are discussing. Don't get, that's one of the big mistakes people make right there. They get all shiny, flashy, they show you science this and science that, and, this amazing thing, and this is what it solves, and this is what it does. And you're like, that's great, but you need to understand the business case for that. You could cure cancer tomorrow, and I promise you, the stock's going to have a huge run. And then when everybody figures out if the company's not profitable, the stock's useless. It's useless to own as a stock. It may be the most important company in the world, but in regards to if it's not profitable, it's not, the investors aren't going to come. The stock isn't going to go to the moon like it should because, yeah, you cured cancer, but you can't make any money off of it. And this is a business. Stock is a business. That is what we are looking at. We are looking at businesses. So no matter how great and how many problems it solves, there's still there's lots of great tech out there that is actually better than a lot of other tech, but the companies go under because the management team can't figure out how to make it profitable. Either it's a problem with the product, or it's a problem with the management team, or it's both in some cases. If you can't make money on it, it doesn't matter what the tech does. It doesn't matter what the science is. It doesn't matter in regards to stock price. Now, in regards to what it does in real life, totally different. I agree there completely. But if we're talking about stock price, which is what we're discussing here today, that doesn't matter. all that pretty PowerPoints and charts and, well, I guess the charts that show financials are great, but the charts in regards to what it does and all that sort of stuff, they're presentations. They're for minds that aren't ours. They're not, investors are not paying attention to that at all. They want bottom line, is it going to print me cash or not? And if it's not, they're moving on to something else. I'll be honest with you guys. I know absolutely nothing about Apple's tech. I don't. But I do know how Wall Street reacts to their margins. I know how Wall Street reacts to the various numbers, increases in revenue. I know how Wall Street reacts to virtually everything that goes on financially within that company, and how the market will most likely react to whatever the heck product they release next. I know that. I know the business intimately. I know what they're thinking. I know how they use their balance sheet. I know how they maneuver in the background in order to maximize company profits. I know all that sort of stuff. What I don't know is how the heck the touchscreen on my iPhone works. I have no idea. I still don't understand the tech. I don't have to be a good investor in Apple. What I have to know is, hey, how is the consumer going to respond to this? And more importantly, how do those translate into the numbers? And how does Apple efficiently use that capital and efficiently do everything else to provide a nice profit on the bottom line that then Wall Street wants to pay for to own a company that is basically printing cash on that bottom line? That's what I have to understand. I don't have to understand how they can friggin' make the touchscreen work and do all the neat little things that it does. And, everything else involved in Apple devices, I don't have to know. I don't have to know how to code. Don't have to know any of it. Doesn't matter. Doesn't matter if they have a breakthrough this or a breakthrough that. The first thing I'm thinking is not what the breakthrough is the consumer going to pay for that? That's important. Not how it works, not the background behind it, not anything else. Is the consumer going to pay for it? How much is it going to cost Apple to produce said item? What are the margins going to be? And then how does that translate down to the bottom line? Those are the things I have to understand in regards to Apple's business. I don't have to understand any of the tech behind it. So that right there is the first huge lesson right there for you to think about. There's multiple lessons here, but that's the first one. You have to understand the business itself. Now, of course, it helps if you understand all the tech behind it too. That can make your even more accurate in regards to what you're seeing and what you're doing, but you don't have to understand that in order to understand the business. But you absolutely have to understand the business. That's your first lesson right there. And if you don't understand the business, you need to actually learn the business, or it's just best to stay away from that type of business altogether. I'm not saying it's right or wrong, not saying some businesses are better than others. You guys obviously can judge for yourself on that. But there's going to be plenty of businesses that I understand and that you don't, and there's going to be plenty of businesses that you understand and I don't. And if I don't understand the business, I stay away regardless of how great the stock is, regardless of everything else, because over the long run, there's going to be a lot of winners, and they're not all in one industry either. So I don't have to understand that particular business or invest in that particular type of business in order to make a lot of money in the stock market, and neither do you. But I do know I have to understand the business itself. And the second lesson you have to understand is you have to understand TipRank's business in the first place to understand what's really going on there. The business is, I'm going to give you hundreds of tips, emails, articles, whatever, over the course of a year that give you tips on literally thousands of stocks over the course of that year. So of course, guess what you're going to have? If I give a hot take or any sort of take on hundreds or even thousands of stocks, guess what? I'm going to have some huge winners. I'm going to have some huge losers. I'm going to have some okay winners, some okay losers, and everywhere else in between. And guess which ones I'm going to highlight if I'm trying to sell a service? My winners, right? And of course, if I choose a lot, if I choose 1,000 stocks, even if I only get 50% of them right, that's 500 stocks I can highlight and say, look, I got this one right, I got this one right, I got this one right, I got this one right. It's great marketing. But what is kind of the bigger picture there? What are they doing? What is the business model in the first place? The reason why they offer all that and they do all that is because they want you to come to them for stock tips. They don't want you to understand how to do evaluation, how to pick your own stocks, how to do your own due diligence. That's not really part of their program, right? It's, hey, we got this hot tip and look, we back it up with all this research and all this and all that and our services, right? It's a sales pitch to get you to use their service. I'm not saying it's bad, right, or anything else, just letting you know the business behind it is you are dependent upon them for stock picks and for due diligence when you don't need to be dependent upon anyone. You don't need anybody to do due diligence to actually know what is the right and the wrong stock for you and to actually learn how to do that. They don't have an education course for you to learn how to do that. That's not what they do because that doesn't help them as a business. That's a poor business decision. The right business decision is to get you hooked, show you all the winners, and continue to throw the winners in your face. So that way you go, man, I just really need to sign up for this. So that way I can hit those winners too, because we're all looking for the easy route, right? If we're all being honest, we all want the easy route. Nobody wants to sit down and spend, I don't know, 2, 3, 4, 5 days doing due diligence on a stock. Or in some cases, I've spent months doing due diligence on a stock because I just couldn't get comfortable. I wanted to own the stock, but I didn't understand it well enough. I needed to dig more. I needed to put in more time. I needed to listen to more earnings calls. That's a big time commitment to look at one individual stock that you may decide, it's not right for me. For a lot of folks, that's, I won't say devastating, but it's discouraging. When the reality is, man, you should really be doing due diligence on a lot of stocks and only choosing the ones that are right. That's the same way with real estate or anything else. I turn down far more real estate deals than I take because I want my deal at the price that I want it at, where the numbers make the most sense and maximize my profit. And if I don't get that, there's going to be another deal. And it's the same in the stock market. There's some stocks that I really want to own. They're just not right for me. And so I don't view it as a loss. I learned something. I learned about that company. Maybe I learned something that's like, hey, maybe whenever I see this, I should revisit the stock. So I kind of put it over there, write it down, and I go revisit that stock later on. And whenever it does happen, hey, bam, I've already done all that due diligence. I'm already ready to go. But even if I don't, and I never buy that stock, it's still exercising. It's like saying, oh, well, since this shot in practice doesn't count, I'm not going to practice, because it doesn't count because it's not a real game. We're just practicing. So there's no need to practice. It doesn't count until we're really in the game. Well, you tell me how well you perform whenever it's time to really be in the game if you don't practice. That to me is what due diligence is in the first place. So you've got to practice. It's just hard. It's a lot harder than opening up an email from TipRanks and going to the article and go, ooh, they say this stock. Ooh, yeah, let me see what they say. Oh, look, they got their little chart right there. Yeah, I think that's a good buy. I may look to buy that one tomorrow. That's not due diligence, guys. But it does keep you dependent upon them for that, and that's the business right there. I know I get asked in my group all the time, hey, what's your opinion on this stock? What's your opinion on that stock? And unless I've done massive due diligence on it, I won't give a take. And more importantly, even if I have, a lot of times I'm asking you questions back. Hey, what's your plan? What are you looking at? What's your timeline here? What's your risk tolerance? What's going on with your investing situation? Do you have enough cash coming in to continue to invest? I ask questions like that because I want you, and more importantly, I teach you that in my group so that way you can become a competent investor and honestly leave my group and you don't need it anymore. Hopefully, obviously you stay for all the, everything else that we include there. But if not, that's okay. My point in the whole thing is to help you learn. I don't want people who are just hooked on Luke's stock tips because that's useless. It's useless to anybody in the first place. It's not helpful to you as an investor because the right stock for me is not the right stock for you. And I want you guys to be good investors. Now, is it a bad business decision? Probably. I could probably do it a different way or just give away buy alerts and make a lot more money and do all this other sort of stuff. But it's not right. It's not what I feel you guys need as investors. There's plenty of other services out there that if I was choosing to do that, they're probably better at that than me. Right? That's awesome. If you want that, you want the shortcut, go for it. If you want to learn something, hey, that's kind of what it's for. But the point being is that is the actual business model behind TipRanks in the first place, is to keep you dependent upon their tips forever. As long as you want to invest, you're going to continue to think of them as that resource to find those hot stock tips. Now, what is my take on these two stocks individually? I mean, what do I think is going to happen? Is there really 90% upside in these stocks? And the answer is, I have no freaking clue. And let me give you a very specific reason why. I don't understand these businesses at all. I get asked a lot in my group about various, medical stocks, therapeutics, all kinds of stocks like that. I have never been able to figure out the business model. I tried. I just couldn't wrap my head around how the businesses work, how they make money. And I found myself, as I spent probably a period of 2 years trying to figure it out, I couldn't accurately do it. I didn't understand it. I didn't have a good feel for it. Every time I thought this was going to happen, the opposite would happen. And it was just, I was wrong at every stage. It was just a business that I just don't understand. Now, we have other members that completely understand it and they're all over it and they understand the business, how it works and, everything behind it. And that's awesome. That means it's right for them, but it's not right for me. So I can't give you guys an honest take because I can't understand the business. I would strictly be guessing at that stage. But the good news is I don't need to understand them at all. There are hundreds of great businesses that have absolutely nothing to do with these stocks. There are hundreds of great businesses that have 90% upside from here. There's tons of stocks for us all to choose from. Heck, just look at Meta, for example. It's already up way over 90% in just very, very short order. I didn't have to wait years for this. I didn't have to take on a lot of excessive risk in order to get that, 90+% return. Now we're well over that. But the point is, to hit that 90% move, I didn't have to. So I don't have to nail these two in order to find something else that has 90% upside from here. So kind of keep that in mind as you move forward. You have to understand these dynamics, not only whenever you're hearing something from somebody else, but also whenever you're looking at what you are actually doing and what you want to invest in. You have to understand the businesses. And remember, if you don't know how to do anything we discussed today, or you want to learn how to do evaluation, you want to take 5 courses for free to include real estate and all kinds of stocks and everything else in the world you could think of when it regards to finance, and you want access to all my buy and sell alerts, my watch list with price targets. I mean, heck, you can slide into my DMs, you can jump in on our Q&As and ask me anything you want. And actually, there's a ton more in the group. Make sure you check out the pinned comment down there and make sure you get your Tesla dip sale price that's significantly discounted before it goes away forever. And click this video here if you want to see exactly what I'm buying in this market, and click here if you want to see exactly what my plan is for this market. So thanks for watching, and we'll see you in the next one.